Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome all of you here today. We got Kevin with us, BJ, Life in the Fast Lane, JP, and many others. And there is the bell. And welcome. So just real quick, I normally teach at this time, and we are being recorded. I'm just checking something real quick. We'll go ahead and get started. So just real quick, want to give us a quick reminder that you could, the recording that you can find, let me show you where that is just real quick. This will actually take us to our page on YouTube, okay? And you're going to see that this link that I'm going to send to you, if you said, hey, where can I actually find the Trading Growth and Value, the playlist? This is going to give you the playlist which you can bookmark. So I want to tell you that right up front because it's always nice to know where do you actually find the classes. You can see all of the prior classes, what we talked about, etc. right there, okay? So just want to tell you that right up front. Now, also, just real quick question that came out is this link right here is the Schwab.com website link for the webcast schedule. You're going to see here we are on June 4th, and our normal slot is Trading Growth and Value Stocks, 4 p.m. Eastern. You're going to notice if you look at on the calendar, going to June 11th, you're going to see that Trading Growth and Value is at 3 p.m. Eastern next week, and Market and Sector Analysis is at 4 p.m. So Mike and I are going to kind of just switch times. That way we could actually kind of push this to Trading Growth and Value inside the regular market hours, and then his when he talks about Market and Sector Analysis, something that is more after hours. That's per your feedback, so we actually did that. So let's go ahead and get started. Just want to give you a quick heads up on that. Now, as we get started here, remember that the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. When we look at examples here today, we're going to be using the Paper Money software application. And also, if we bring up examples of stocks that pay dividends, understand that they may reduce or stop paying dividends, okay? So it's not like a T-bill or something like that, a CD or something like that. There's a risk that they could change the dividend policy. And also remember that investing in stocks involves risk, including loss of principal. Now, remember today what we want to do is take a quick look at where the markets are. I want to take a look at the sectors as well. The reason why we want to do that is we kind of want to see, is there risk appetite for growth stocks, or is it a little bit more value income oriented? That's really important because that's going to kind of give you an idea of where those setups could be. With that, we need to take a look at our current positions. I had a question also on the 8-day low and kind of some of the chart settings we have, and I will share that and review that and kind of show the practice of that here again today. We did it about 10 days ago, but there's been some questions. Now, as we talk about some examples, we will look also to add to the portfolio as well and manage the portfolio. Now, let's kind of go ahead and just take a quick look at, I'm going to type in SPX here. And if I look at the SPX, what you're going to notice is in the last 2 days, we've been really talking about like a moving average crossover, if you will. That crossover is still in effect, okay? Now, today, you're going to see the intraday high. We went up to 59.90, and that was actually eclipsing the prior high. The prior high being on May 16th. And also May 19th as well. And so we did close above that. We traded above that high, and we closed. Now, I know how you feel. James, I want that green candle. I know, but it's on our birthday right now, okay? Every day can't be our birthday. That'd be nice, okay? But it still traded there and closed above it, even though it's actually a red candle. Now, if we go back and really take a look at that, the path of least resistance might be to that 61.12 level. And again, we're not going to kind of become so like, oh, staring at the SPX all day. We want to be watching what could be the catalyst to having the market move higher, like semiconductors, like technology, like discretionary, like consumer, communications. Are they buying those growth areas? Okay. So a lot of people just stare at the indexes. I'm not really sure if that's the greatest idea. Look at the sectors that have a higher weighting to the S&P 500 and look at those areas that actually have higher growth forecasts and currently have had some high growth as well. Now, The big thing is if we actually take a look at the NASDAQ itself, the NASDAQ really led to the upside. It's continuing to lead to the upside. I know some of you can't stand it, but I'm just joking. Some of you are like, James, just hit me again with the wet noodle. But if we take a look at this, what you're going to notice is the intraday low tippy-toeing all over that 10-day moving average. And boy, I hope that's something you really remember, okay? And if you take a look at that, that did close, got above the prior high, got above that high, and that intraday low was really right at the old high / the moving average. Now, if we go back and say, what was the 52-week high on the NASDAQ? The answer is 22,170. Now, if I asked you a question like, what sectors have you been watching, what would you say? Now, as I'm getting some answers, some of the things that I think are interesting in the current market, yeah, there's some equities that are moving, sure, okay? But I want you to kind of keep an eye on gold, silver, copper. Just because the equities are going up does not mean the commodities can't go up either. That's not true at all, okay? You can get both to go up at the same time, and you're seeing that really copper had a decent push here today. Gold and silver have been moving better in the last couple of days, so we would say those three: gold, silver, copper. The other thing we would actually include is if you look at the US dollar, that has continued to be pushed down, and so has the VIX, okay, which some investors kind of look for taking risk. And now, what I want to do is if we talk about the sectors just real quick, and we're going to look at this from a chart perspective, and we're going to look at this also from, we're going to type in $IXC for the sector index. And if you zoom in here, what you're now going to notice is, again, we can talk about crossover on Tuesday, right? Monday, Tuesday, here we are kind of getting a little squeeze. We talked about how many of these charts, they kind of really had like symmetrical triangles and or pennants. And they're kind of getting to that point where they've squeezed, meaning when I say squeeze, I'm talking about the resistance and support. They overlap on each other. Price breaks out up or down. In this case, so far it's been up. And now could it actually start to lead to the upside? Now, get comfortable with actually communication, because that's really where we've actually had some pretty strong growth in that area. Be aware of how to scan and just kind of see what's in that group. Or we could just take a visual effect, market watch. We could go right to visualize, and we could say, where on this list do we get communication? And if you look at communication in the S&P 500, Google, both of them, okay, Meta, and Netflix. So if we kind of said what in there was actually pretty hot today, if we're talking about the hottest, the lightest green color, it was yours truly, Meta, which we've talked about and you've brought it up. The other one I want to kind of point out here today is Live Nation. That also had a pretty good bounce here, and it's also bouncing off the diagonal line, okay? We'll come back to that in just a moment. The one area that we said we want to also keep an eye on is basic materials. Now, again, if we're going to say gold, we're going to say silver, we're going to say copper, and with some of the news we saw with steel, you're thinking steel's also in base materials as well. Put that, get a little push, starting to see a little lift. And now you're starting to see that getting above the 923 with the crossover. Now, probably one of the names that many of you were watching intraday as we saw a little squeeze breakout was also on the industrials. Don't even look at General Electric. Just don't do it, okay? And if you look at that, again, we've been saying for weeks how it's pretty hard to have a recession if you're seeing industrials go up in the magnitude that they actually have. And the last one, but not least, of course, if we're talking about kind of strength, you know, you're going to need some participation really from the technology. The area that we would probably say is a little softer is really going to be IX, the IX. Let me pull this sector list up. Pull that up right there. Yeah, what you're now going to notice is that sector, it's not really following as strongly as technology is and communication. So the consumer discretionary is kind of showing a little neutrality here, okay? So takeaway would be still communication, Second would be base materials, industrials, and technology. Now, here's the deal. Are we saying that the other areas are bad? Like utilities. We're not saying that. We're just saying they're not up as strong. Now, a lot of times we can actually kind of have like difference of opinion, but I kind of like to look at just kind of the stats, okay? So if we were to, let's say, look at the last 1 week and we said, hey, sectors, tell me what the sectors have been doing over the last week, and just look at the stats, okay? Now, stats are just telling us what's happening in the past till now. It doesn't necessarily mean the future, from now into the future. Now, if we take a look at what's been pretty strong in the last week, it's been yours truly, technology, okay? Now, if you also go down there in the last week, you actually see real estate. Healthcare has bounced back a little bit. If we're talking about in the last month, now week would be focusing on like a bull flag pull. Maybe it just broke out and it's pushing to the upside in the last 5 trading days. That's what you're using the 1 week performance to do. Try to find the pulls, okay, that could turn into flags. If we're talking about the 1 month percent, now we're starting to talk about some trends. Higher highs, higher lows, same idea, looking for something where which ones have the highest percent, okay? Technology, industrials, discretionary, there's your benchmark, there's communication. It's kind of more in line with what we just said, but now we're seeing statistical numbers to see that, okay? Now, Owen actually says, well, what about financials? Financials are there, but so let's kind of bring this up just real quick, okay? When we look at financials, it is positive for the month, but tell me what you see on the relative strength for financials. Now, again, we're talking about the sector of financials. And if we said, well, how are financials comparing to, or what relative strength do we have compared to the S&P 500? The financials have actually been underperforming the S&P 500. They have not been as strong as, and I'm talking about the sector to the sector to the sector. And if you take a look at, let's say, the technology, that's been the strongest, okay? And so you're going to notice that even base materials in the last 2 weeks have been a lot stronger than financials. When we talk about financials, clearly it's going to be top heavy in banks. And if we go back and like say JP Morgan, it's kind of neutral still. You look at Wells Fargo, it's kind of like popped, rallied, faded back a little bit. Citi tried to actually pop out. When you look at the insurers, AIG, the insurers and the credit cards, those have really been the ones that have actually gotten a little push. The Visa, okay, talked about that for weeks, MasterCard, and so on. Those are the ones that have been getting the push as of lately. The one that's kind of in that space of a symmetrical triangle pennant, could it break out? American Express and so on. So we get it, okay? So we know that when you look at a sector, you could have strong industry groups in the sector, but when you look at the financial sector in general, it's not as hot. You'd have to look at the individual industry groups and say which ones have been stronger. And we highlighted that. It's the credit cards, and then probably the second group would, now, by the way, I would also kind of include like CBOE, ICE, things like that. Kind of the CBO, and this is important to really bring up. The CBOE, now, like with these type of companies, which have had some strength as well, these are really going to be like, how would you, exchanges, okay? And it would have companies like ICE, etc. And these have also had some trends as well. Now, we're not saying that the banks are just, they're horrible, but they kind of gone neutral, okay? All right. Now, some of you, for example, when you kind of point out, hey, when you look at technology, look at the SOX, the semiconductors. Tell me what you see on the semiconductors. Now, when you look at the semiconductors, what you're going to notice is that's a brand new short-term high, okay? Now, if you go back to one of the main names in that area, it's NVIDIA, okay? Now, it's kind of so interesting to me how, people kind of talked about these 2 days as like it broke down and it's not a good trend. Remember what I said, okay? On earnings, even if the earnings are good, there is a high chance of profit taking because investors, a lot of them already got in. And earnings, think of it as a potential payday for investors if they wanted to profit, if that stock went up over time, and so on and so on. If an institutional investor wants to sell large chunks of shares where it has the greatest chance to get filled at a potential without hurting the price as much, it tends to be on earnings day. Now, you could also think of it as a liquidity day. When the volume is higher than normal, investors know that, and they try to target their exits on the earnings day. So sometimes them exiting doesn't have anything to do with how did the company do, but they're just saying, look, I had a plan I was going to invest before the earnings, and they're planning to get out on the earnings and sell large chunks of shares. That was their goal, okay? Now, if you look at NVIDIA from that time, we talked about that yesterday, it never broke support, came back right back to the upside, and there she is, okay? So be very careful of being fooled by red colored candles thinking that's a broken support. That's not always true. You have to put the red candles in context, okay? And now you're going to see that's right back up to where it was. Profit taking in a day or two doesn't necessarily mean a broke trend, okay? All right. Yeah, thanks, Ben. We got Ben Watson in the chat. We thank him for answering those questions. And also there's a survey in the chat. Now, one thing I do want to kind of bring out is I want to kind of just show a couple things that, let's kind of look at some of the things we've talked about, but I kind of want to bring up kind of like how to use it in application in regards to this class. So what I want to do is I just want to pull up the stock positions in the IRA account, okay? Now, what we're looking at is we've got a couple stocks, okay? And JP asked a question that I want to kind of get to, and I'll mention what it is right now. JP says, so first off, a couple weeks ago, JP asked a question like, hey, sometimes it might be a struggle to maybe practice entering. And we talked about risk, like being comfortable with risk. It's probably not entry. It's probably, are you comfortable with how much you're going to invest and what the risk is? The second part of that question, maybe now, is, okay, maybe I got in, the investor says, and I'm seeing a stock that might be near a target, but now I don't want to have second thoughts or remorse in selling at a target and wonder if the stock goes higher. Now, first off, could the stock go higher? Absolutely, it could go higher. The biggest thing when I've ever felt remorse, that you're talking about, usually what that means is the investor doesn't have that many positions, okay? So in other words, if we had like AEM, Costco, and Dash, and that was it, and we sell two of our positions, how do you think we're going to feel with only one stock in the marketplace? Well, you kind of feel a little lonely. So the first moral of the story is, why does the investor only have maybe 3 positions? Okay. So for some investors, they say, look, I might set a goal. The investor says, maybe always have 5 or 8 positions. Don't always have to be bullish. It could be bear, but let's say they're bullish positions. Maybe 8 to 10, maybe 10 to 12. If you find that you struggle with selling at targets, okay, and being potentially remorseful, you just got to remember, if it hits the target, you got your profit target, and no one says you can't get back in and try to go for the next run. Second, if I said, hey, I hit the target, and I'm now struggling to get out, I even moved up to stop the whole 9 yards, or I just manually got out, how many positions do you have left? Now, if I was a betting person, I'm not, but let's say if I was a betting person, I would bet that the person had probably less than 5 positions. Because if they had 8, 10, 12 other positions, there's probably a greater statistical chance that they would sell into the resistance because they got other positions. Okay? So think about that. And that could be kind of a part of what we talked about prior. Now, I want to kind of speak to kind of looking at the column headings for a moment. And the column headings we want to pay attention to is trade and mark. Obviously, trade is where we got in. Mark is where the current stock is now. I want to also look at the 8-day low, and I want to look at the mark compared to the 8-day low. So if I looked at the mark and the 8-day low, we're about $8 apart. So I know that, for example, when I looked at the stops, I'm not really close to getting stomped out on AEM. If I decided in this case we're going to use a 10-day low, we're even farther down than that, okay? So we're not kind of in, super close and getting stomped out. The trend is trend 3. Now the trend, this one with the arrow pointing down, that's the trend for the daily chart. This is trend for the weekly chart. Now I'll tell you what, if you said to me, James, what's the worst thing in the stock market? And this is a little joke here. James, the worst thing in the stock market is a stock in trend 3 on a daily chart and a trend 3 on a weekly chart. That's where you have the shorter term trend and that intermediate long-term trend, okay, price most likely above the moving averages, as we can see here. And sometimes, if that trend can go, it might get a little push. So if we're talking about adjusting stops, okay, if we're talking about adjusting stops, let me kind of show you some charts that we talked about before, but I want to kind of practice them now, okay? Now, by the way, you could see it, but it doesn't mean you know how to do it. We know that to be true. I've seen a lot of things. It doesn't necessarily mean I know how to do it, okay? Now, what I'm going to do is I'm going to pull up the chart just real quick. Now, historically, we called this chart before the package. Now, wait, why'd you call it the package? We called it the package really because it's a package of individual charts and settings. So first thing what I want to do to show us how we could use this and practice this, what I'm going to do is I'm going to share this grid with you, okay? Share that grid with you. And what you're now going to notice is when I share that grid with you, you go to Setup, Open Shared Item, and I'm just going to copy and paste what I sent to you in the chat. Now, once I copy and paste, now how do we get here? We went up to the top right, Setup, Open Shared Item, and then copy and paste. There it goes. Can't get any easier than that. Click on Preview, and then say Import. Now, when I import, it's now going to just bring up a small chart that will look like this. You'll see the label there, package just meaning multiple charts. And you're going to see that also it looks like there's 4 charts. 1, 2, 3, 4. There's a back arrow and a forward arrow where you could switch between charts. We're going to do that. Okay. Now, if you say, well, how do I save this grid to my computer? You might say, just go down to where it says Save Grid As, and I just call it the package of charts. And when you do that, if I say Save Grid As, and if you don't mind, I'm just going to call it, JP chart, okay? If I do that, now what you're going to see is when I click on those lines again, you're now going to see the JP chart is right there. So that's all it is, okay? Now, what I'm going to do is I want to go to this. So this is our standard chart that we use, the whole moving averages with the shading and with the Cahole dot. Okay, fine. Second chart that we actually talked about historically was really looking for breakouts. This orange line, again, is a 10-day high, an 8-day high. Let me actually check that. Just make sure there's no setting change. Yeah, it's a 10-day high. It's a 20-day high and a 55-day high. So this is kind of helping identify when the stock in the shorter term is hitting brand new highs. Brand new highs is not something that's fearful. It's actually something that's showing confirmation of trend, higher high. And so that's what the orange dot represents over time. Blue line, okay, so that right there. And if you said, James, where can I see that? The orange is a 10-day high. The second line is a 20-day high, and that third line is a 55-day high. Okay, so there it is. And now and that's what that chart is showing, and we're going to show some examples of that. You're now going to notice I'm going to go to the fourth chart. The fourth chart, now remember, how do we actually go over to the right? I'm going to click on that arrow. What I'm bringing into question right now is on the stock of AEM, if we were using days lows as far as kind of a way to raise the stops, well, AEM, since the breakout, has actually done quite decently. Now, what you're now going to notice is these little dots over time, they're just showing where's the 8-day low over that prior period. And all it's doing is it's going back 1 day, 2 day, 3, 4, 5, 6, 7, 8, 9, and so on. And what it's doing is it just labels where's that 8, 9, or 10-day low, whatever one you want to use, and it plots where that day's low were on the chart. That's all it is, okay? So if we said, hey, where's the day's low? Well, if we want to use something a little shorter, it's at 113. Now, what you really want to see is the stock kind of maybe consolidate a little bit and then be able to raise up the stop more aggressively. So in the current marketplace, if we're using that white line, if that dot is actually going up higher, what is that visually telling the investor that they might consider? Raising up the potential stop. Okay? Now, let me bring something up just real quick. Where could we see on the chart what time frame they were? We're going to click on that, the little test tube right there. And it looks like the white line, and we could verify that, that is really the 8-day low. And the red one is the 10, and the yellow is the 20. Now, if you said, well, how can I see that? You're now going to see that the yellow line, there it is. Days back. It goes back 20 days, yellow color. Go back to this right here. What's the 8-day low? Click on it. It's the white line. Okay, so let's repeat that. 8, 10, 20. Okay, so on AM, we don't really have anything to do here. Now, I'm going to go back to JP's comment for just a second. Let's say the investor said, you know, James, I'm looking for a prior target. Now, this is the way we've always talked about kind of doing examples of targets. And I just want to bring this out to us, okay? So if we sell AM, if we do we have other positions in the portfolio? We do, okay? Now, if we sell, I don't have this feeling, a pit in my stomach, that if we sell AM, now I'm going to have to start all over again. Like now I got to find something now. Does it make sense? Now, let's say the investor said, James, I'm trying to go to 125.78. Now, this is very important you do this because what happens is investors tend to give a lot of it back at the very end, okay? Now, I apologize to kind of go nerd out on you for just a moment, but this is very, very, very important. And who made this up? I did, because I got sick and tired of giving it all back, doing everything kind of right, and at the very end, just giving it all back. So no one explained this to me. I made this myself, okay? This is where I said, hey, maybe this is an application. So if we actually kind of said the current price, okay? And I'll do this quickly. The current price is 123.61. What's the target price? Well, the target price is really 125.78. What's the reward remaining? Well, the reward remaining would just be the difference between those two levels, between that and that. So it's $2.17. Now, if we said, well, hey, James, I'm using really the 8DL, the 8-day low, and I want to kind of look at, well, what is that 8-day low? Well, we can see that on the right-hand side, it's 113.88. If I type in 113.88, it's going to now kind of show us what's the potential give back, okay? And I think in writing this out, you kind of start to see now what the problem is. Well, if the stock is at 123.61, and for example, the stop, the 8-day low, if that's where you're going to set a stop, is at the current stock is at 123.61, the 8-day low is at 113.88. You're now going to notice that the potential reward is 217, and you're going to see the potential give back. If we just fall down to that white line, it's 973. Now, I like to think about this in a ratio, like, okay? Now, if I said, hey, we're trying to make 217, but we're risking 973, well, what you're going to notice is it's really like saying it's a 1-to-5 ratio, okay? And so many investors might say, I'm not going to try to make 2, but then risk 973 plus even more. Investors might say, that's insane. Now, what some investors might do is they might say, look, I'm going to actually just kind of I'm going to tighten the stop. If we said a 1-to-1, I'm going to try to make 2, but only give back 2. Fine. If the investor says, James, I'm going to try to make the 2, and then allow the stock, for example, to maybe go down 1.5 times what the reward is remaining, Simple math here. Let me actually just type this in. Well, if the stock is at 123.61 and I'm trying to make 217, all we're going to do is just kind of, now some investors kind of call this choking the stops. Okay, probably not the best, word to use there. Let's just kind of say adjust the stops up more aggressively, okay? So all I did is to take the 123.61, reward remaining 217, subtract that, and we're going to move at the stop to 121.44. Second, you're now going to see that if we take a look at this, 121, in this case, let me actually change that, and I'm going to times that by 1.5. All we're doing is just giving it a little bit more room, okay? And if we did that, the secondary stop would be at 123.55 if you're trying to give a little bit more room. Now, 1-to-1 means whatever the reward is, I'm not going to give back more than what the potential reward, the reward is to the downside. So if I'm trying to make 2, I'm not going to give back more than 2. Now, when I say that, that's kind of not right because a stop does not guarantee an exit. The stop is going to be at 121.44, but we don't know what the fill is going to be. Now, so we'd have to see where it fills. If we're trying to give a little bit more, 120.35. Now, so we got to think something through here. What's the trend on gold? Now, notice how I'm doing this all on the fly, okay? JP brings up a great question, and whatever you guys want to talk about, just let me know. We can just talk about it right on the fly. I don't need to take time to prepare because this is just kind of application, okay? If we took a look at this and kind of said, okay, is gold, the price of gold, is it bullish? Is it neutral? Is it bearish? If we sold AM and we got stomped out, okay, let's say we don't go to the target, but we get stomped out. Well, what do you think the chances are of AM going higher if the gold price is going higher? If basic materials are shooting to the upside, if they did? Well, we know there's probably a pretty good chance that there should be another reentry. So failure point number 1 would be not recognizing what does AM do? What do they sell? And then watch the prices of what they're selling. If they actually do gold and silver and those prices go up, there's a high likelihood that 125.78 could be breached by price. Now, but if the investor says, James, my target was that 125.78, I'm going to try to go to that target. And if we break out, I'll re-enter. You need to understand something that in an uptrend, there could be multiple entries and exits over that span of time. This is why some investors like maybe 20, 25 stocks, and they're watching them day after day after day after day. It always concerns me when someone's looking at a list of 500 stocks on a daily basis. You can't possibly get comfortable with that many stocks, okay? So you might consider kind of making your list a little smaller. So I spent a little time talking about stops. So I want to kind of what do I want to do here is I want to bring this up just real quick, and I want to kind of go AM, right click on that. I'm going to say create a closing order. Now, when I say create a closing order, I'm going to put the target on it, like JP was talking about, but I'm also going to put the stop on it. Now, so if we take a look at this target, okay, what was the target again? That target, what was that price? 125.78. Let's put that right there, okay? 125.78, okay, dated GTC. Now, what about the stop? Well, that stop, what was the stop? If I'm going to try to make $2.17 to the upside, I don't want to give back more than 217, asterisk, understand what a stop is, and 121.44 is the downside. Now, here's always the maybe sometimes the misconception here. This is what the reward is remaining right now. Let's hypothetically say that the stock, for example, tomorrow goes up to 125.29. What might the investor do then? Well, if tomorrow morning it gaps, let's say gold shoots up overnight, and all of a sudden we say, man, my target, still got a target 125.78. I'm trying to make 49 more cents. The stop as of yesterday was 121.44. That investor, even, it doesn't matter if it's intraday, it doesn't matter. The investor is saying when I see that reward shrinking, they could be moving up those stops intraday. Does this make sense? Guys and gals, I'm telling you, if you don't understand this, you're going to tend to give it all back right at the very end. So when you start to recognize that the reward to risk ratio is a 1 to 4, 1 to 5, 1 to 6, 1 to 7, or worse, but the minimum is 1 to 4, you're saying, look, you're giving back so much relative to what you could potentially make. Okay? Hold on. Okay. Good. I'm just taking a look at this real quick. Okay, now, Josh actually says multiple entries and exits. I have too many positions. That's my issue. So I think, hey, look, there's nothing wrong with kind of practicing. I think when you're first learning, you're practicing a lot. That's not a bad thing to do. Not at all. Okay. So I think the biggest thing is kind of with that is you might say, okay, now that I'm doing practicing, now I'm trying, you do quantity first when you're practicing, and then you start to focus on quality and then making sure that those positions really have maybe a position size that you're comfortable with. So now you're just kind of fine tuning. Okay. Now, was that kind of helpful to go through? Now, what I want to do in the next couple of minutes here, I'm going to send this trade in. Let's go data GTC, confirm and send. And notice what it says written down, how we talked about. With stop orders, there's no guarantee. Okay. We could see that there. And if it says illegal 54 shares, what does that tell us? It means that there's a stop or a target on it already. I'm going to cancel that OCO group. And what I'm going to do is I'm going to put that one back on, which we could have adjusted it. Could have done that too. Confirm, send, and just send it right back in. Okay. And there it is. Now, what I want to do is, so when you're kind of managing a portfolio, you're really looking at kind of where's the mark price in relationship to the 8-day low or 10-day low, depending upon how tight you want to set your stop. 220, 197. Boy, would like some consolidation on Dash. We're still $23 off. Mickey D's is the closest. It's within $2.40 of actually being triggered out. It's down. And when you look at, let's say, something like Microsoft, we're about $15 off that 8-day low, $4 off. Travelers, about $3 off. So the ones that are kind of being a little tough on us is Mickey D and Travelers. So this is kind of how I'm visually kind of gauging how close am I to really these stops. The closer we are to the mark and the 8-day low, it also kind of tells me something about trend. Trend is probably going to be a 5 or maybe a 1, and the 10-day whole moving average most likely is going to be a red. Of course, those are correlated to each other, okay? But that's how I like to see a visual on the monitor page. If we want to go to the charts, we could just pull that up right on the charts. So I just kind of want to follow through on that. Now let's kind of talk about some new examples, okay? Now, when we talk about some new examples, I want to go back to Amazon. Now, there's been some questions on this, okay? And so what I want to do is I want to go back to this chart. I'm going to zoom in for just a moment. Now, this chart is that third chart. And let me just go back, and I'm just going to go to the second chart. The second chart right there. And if we zoom in, there was some discussion today about could Amazon start to bounce up? Well, if we take a look at this, where is that low? Now, if you said, James, I can't remember what that low is, what duration of time it, well, just right click on it. It's a 10-day high. Right click on the blue line if you forget. It's a 20-day high. Right click on that line. It's a 55-day high. That's another way you could see what's the duration of time. Now, what I'm going to do is I'm going to right click on that that orange line, and I'm going to say buy custom, and I'm going to say with OCO bracket. Okay. Now, what I'm going to do is I'm going to go back and kind of take a look at this and say if, now on this order, we're saying, look, if the stock gets to 208.81, which is where that 10-day high is, we're going to go limit to a stop limit. Okay? Data GTC. Now, what we're saying is do not buy the shares unless it gets at or above that price. The cap in which we're allowed to buy it up to, let's say we used $1 filter here, 209.81. So this is saying don't buy it unless we get to that price or higher, but you're not allowed to buy it any higher than 209.81. Now, if we said the target price, so today we kind of talk about targets and what kind of happens or what could we do mathematically to try to keep those like a reward a little higher than relative to the risk. We showed that. We wrote down the kind of that little sheet. We talked about that before. The other thing is now we can visually see the stop adjustments over time as well. So if we're not at that target yet, there's still a way where we could actually say, can I visually see where those potential stops could be moved to if that line is inclining higher? Now, if we actually said, okay, what about maybe a target area here? Well, if we kind of went back and said any old support potential resistance, we're going to really say right about 219.70. Well, 219.70 is about right there. Now, does the investor have to put it at that target? They might say, James, hey, look, the area that I saw was 227. Now, here's the thing that we did not bring up. Wonder if you have a stock that's going close to your target and the market is just bullish. The VIX is falling apart. Yay, okay? And just things, the discretionary sector is doing amazing. Have you ever considered maybe moving up the targets considering market conditions? That's a game time decision based upon what you're seeing in the markets. But sure, if that investor said, James, the market is hot right here, that target, we might blow through that. That's a decision based upon what you're seeing in the market at that point in time. Okay? We're going to go dated GTC, and then we're also going to set the stop. Now, when we talk about the stop, we said initially, we're going to go back the last 1 or 2 weeks and actually say, where do we see a potential support level? It's probably right around the 202.08. Okay? If I took the 202.08 less 2%, it's really going to be right at 198.03. 198.03, dated GTC. Now, just to wrap back to what we said before, this is how we're using an initial stop. As soon as that 8-day low or the 10-day low or the 20-day low go higher than that price, that's when the investor could say, I'm using those lines that are below us as a way to move up the stop. But when we set the initial stop, we're going back the last 1 to 2 weeks and saying, where do we see a horizontal or diagonal support to set the initial stop? Okay. Now, I'm just going to kind of set that one right there. I want to kind of show us a couple stocks in closing here. So some of the stocks that we're going to keep an eye on, Sherwin-Williams. Okay. That's a stock that is tippy-toed the last 2 to 3 days right off the support, leaving long shadows. Okay? Now, someone was kind of eyeing that. You see that? Okay? Eyeing that, pushing it up. Now, remember, this is going to be in the industrial-based materials. Could we finally be getting actually above? And it also kind of does have, if you look at the weekly chart, kind of more like an inverse head and shoulder. Okay, so that's one. Now, we also got an alert. So if we go at or above that price, 364.67, we should be getting an alert on that. Keep an eye on Sherman. Now, we also see that if we take a look at, let's say, a stock like IBM, same type of idea with IBM, but it's a little bit more tilted. This kind of more looks like a kind of a non-symmetrical cup and handle, but on the right-hand side, it runs to the upside. There's the handle forming with a shorter-term double bottom, okay? And then all of a sudden on the right-hand side, the rim of the cup right there. So IBM is another one that's kind of, could that be one that continues? And when you look at a 3-year weekly chart, that's what it looks like. If you look at the weekly chart, it really does look like a classic V pattern, okay? Now, the one that we kind of also want to go back to, just look at just real quick, Meta was the one that had the shorter term cup, not much of a handle on the daily chart, and your classic 1-day pause, and then firing right back to the upside. Remember, always remember what I said. The shorter the duration of red candles when the price is above the 10-day moving average, the stronger the momentum at that time. So if it only went down for one day, then buyers come back the next day, they're using that red candle from yesterday and buying on the dip. Now, the other one that we kind of keep an eye on that we've talked about is App. AppLovin, same idea there. One day down, fires back. One day down, fires back. Keep an eye. And the last one we'll mention, because we're out of time, is DoorDash. We kind of talked about, could that stock really break above the resistance? One day down, fires back. 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 Let me tell you why you keep saying that, James, because I'm telling you, some of us, including myself, we don't get it. That's how momentum works. Shallow pullbacks in terms of percentage and duration of time, brief. And that trend tends to continue at that point in time. Okay, so I'm out of my time here today. I tried to answer some of the miscellaneous questions I was getting in the chat and also in the surveys. There's a survey in the chat. Please fill that out. And I actually thank you for that, but I did try to answer as many questions as I had recently on YouTube. Now, also remember with what we talked about here today, it was done, for example, in illustrative purposes only. Thanks to Ben Watson for answering those questions in chat. And today we kind of talked about some of these key pieces of really trading at targets, adjusting stops, initial stops, and so on, and also kind of understanding kind of the basis of momentum. Stay tuned for our next webcast coming up tomorrow morning. We'll be back tomorrow morning there. Join us. Thanks so much. Take care. Bye-bye.